Yo, what's good with you guys? Back again with another video. Hopefully you guys enjoyed the last one, so let's get into this. Um, Today I'm gonna be going about SMT Divergence. So let's see. Make sure you guys also go subscribe to my channel. Thanks a lot. Make sure as well to go watch the newest video. That's me explaining how I made $2,000 in one day. I am gonna redo this video because the whole quality is just, yeah. And I know you guys are probably like, what the heck? So we're gonna redo that today. I know, I'm sorry about that. So let's get into this. So let's talk about SMT diversions. Oh, don't mind that. This is an SMT, by the way. I'll teach you guys that right now. So, my freaking big head right there. Okay. What? Oh shit. Excuse my language. Alright. What is a SMT? So essentially what SMT divergence is, guys, is where the market is lagging in one of the indexes. So for futures, I believe you can find SMTs in the US 30, but I don't trade that. I only trade futures, which is the S&P 500 and NQ. So if you guys want to go along and trade the same thing as me, go ahead. But this is only for futures and the US 30. But I don't know. I don't use the US 30, so I don't know what the other one compares to. So we're just doing futures. So if you're a futures trader, stay on this video. If you're not, then click off this video and go find a different person because I'm not the one, clearly. But so what is an SMT? An SMT is just clearly like just telling you where. So say we made how can I use this as an example? Say we're in an uptrend in NQ, right? We're in an uptrend in NQ, right? Actually, this one kind of sucked. This one kind of sucked, actually. Hold on. Okay. Say we're in an uptrend in NQ, right? We're in an uptrend, right? Boom. We're in an uptrend on ES, which is the S&P 500. Okay. So I'm going to write down the names of these. So we got NQ and ES. Actually, this ES example, this NQ example sucks. Hold on. Okay. So what is an SMT? An SMT is the lacking index. So this is NQ. I'm going to move this one. This is NQ, and this is ES. ES. Okay. So market just opened on these. Same thing goes for downtrend. So market opens, boom, and we get market opens, boom, get market open, right? So boom, what do we see first? Technically, SMTs do come off of liquidity sweeps. So what can you see here? This low right here, this low, don't mind. Okay, this low got swept by liquidity right here. And what did price do? Go like that, right? But what did price do on ES? Never even went near to that low. Never even touched it. So what can we call this? An SMT divergence. SMT divergence is when the index makes a lower high for the uptrend. Write this down. I'll write it down. So NQ is the lacking index. So boom. That's your SMT. So basically NQ's lagging, and it's telling us that market's going to go up with the same thing as ES. Look at ES. It already made its whole damn move up. We're too late to the move. So NQ is just giving us chances for it to get to that move. So then, boom, you find your confluences. You find your order block. Boom, price never hit that. You find the inverse for value gap right here. What did price do? Inverse that. Boom, set up your long positions. Set it below that low. Boom, you set up your take profits, you take a win. Boom, just like that, guys. So let me write this down so you guys can write down. So SMT uptrend, find a lower low. So two lows, and they have to be lower low. It can't be a lower high. If it's a lower high, then that means that index is going good. But if it shows that both of them are lower highs, then that's not an SMT. You don't got to worry about finding an SMT. Lower low on index. Index. So uptrend, for the uptrend, you find lower low. You find a lower low. So let me draw this. You find the lower low as your SMT. You find the lower low as your SMT, guys. Find the lower low. And then on the other one, you find the lower high in order for it to be the SMT. And I'll show you guys that right now. Lower high. Okay. Then for the downtrend, same exact thing, just highs. So then, I mean for the downtrend, my bad, I had a brain fart. Downtrend. Find lower high on one index and find higher high. Okay, boom. So make sure you guys write this down real quick. Leave this on here for a minute. Or you guys can just pause it, I guess. Yeah. Okay. Okay, so let's go back to. I think I deleted all my drawings. Yep, I did, like a dumbass. Go back. Okay, there you go. Okay. So we can get rid of all this shit. Alright, so we come into market open on New York. We see that we did have a liquidity sweep pre-market, so then we just wait for manipulation. We couldn't find any entries, but look what market did. When market opened, it swept that high. But on ES, we didn't sweep that high when market opened. So what could we say? That NQ is the lagging index because it made the move that ES didn't make. It already made its move down. So we got to find a higher high. Okay? This is a higher low. We don't want that. We want higher highs for the downtrend, and we want lower lows for the uptrend. So boom. We could have not took a trade off of this SMT. It was a good SMT. Don't get me wrong. But look what, you couldn't find anything else that goes along with it. Any confirmation confluences, any continuation confluence. Because we never had that. We just only had an SMT. That's what you guys don't want to do when you guys are going into a trade. SMT is basically just like, it's literally just like a break instruction. It's just telling you where it's going to go. Boom. I could have took a trade off of this today, but there was so much news. So I didn't even bother looking at the charts. But I kind of regret it. I could have actually took a good trade off of this. So we see that on ES, we see that we made this low, then we make a lower low. And what are those lows? To the uptrend. What did NQ do? Made a low, but it made a lower high. So what does that mean? This is the SMT. This is the lagging index. We mark out our SMT. We had our order block. We had a liquidity sweep. Immediate reaction off of this liquidity sweep. Boom. What else do we get? We get equilibrium. We waited for more confirmation. We get an inverse value gap to the upside. Perfect. What could we do? We could have just took the trade perfectly off of this. And you guys are going to say, well, why would you take the trade off of the order block and just the equilibrium? Why not the fair value gap? The inverse value gap? Well, equilibrium's the discount. So the banks are just really selfish about their money, and they want it at a better discount so they can just buy it. So then they make their move. So it's always good to take the trade if it's in equilibrium or not. So I like using equilibrium a lot. And look what price did. It was in that equilibrium for a while. And for equilibrium, it has to break out in order for it to not be valid, but it never did. It just went really down into that. And it tapped that order block again. So as soon as I seen buying pressure out of it, boom, set up your take profits, take that trade. 5.04 risk reward. That was a good trade. I could have took on my funded and passed that, but I didn't decide to. Kind of regret doing that, but same time I want to follow my rules. But today we're just talking about SMTs only. So this is the SMT divergence. So it's pretty easy to find on the chart. Like, you guys will be able to find it. It just occurs when a liquidity sweep happens. So look, boom, you get liquidity sweep right here. Boom. So look right here to SMT. We make a high and a lower high. And on here we make a high and a higher high. You guys could mark this out, practice. Make a high and a higher high right here. SMT to the downside. Okay, that's it. But so that's basically what SMT is, guys. It's literally just the easiest confluence there is. I'm not gonna lie. It's nothing too crazy. It's pretty. That's all it is. I mean, it's really good to use. I like using it in the market. I like looking for it and finding it. Sometimes it's never gonna pop up, but sometimes it will, and you will take good trades off of it. Like this SMT would have been good, but there was no other confluence I could have used to make sure I was okay with this trade. And if I did, I probably would have got break even. For surely would have got break even. But on here, if I just waited, which I probably would have did because price was just dumping and dumping and there was no other confluence I could use. As you can see here, we had a 5-minute SMT, liquidity sweep, order block, breaker structure. But breaker structure, we had equilibrium, we had an anniversary value gap, boom. We already knew that we were in the discount, so why not just purchase it already if we already seen immediate closure from this candle right here in the discount telling us that we're bullish and we're going to start going up. And we already had our 5-minute SMT ready to go. So that's basically what SMT divergence, guys. So that's gonna be a wrap for this video. Quick little calm video, something easy. So I'm gonna give you guys some homework. Mark out five SMTs on each pair. You're gonna find them in the market. They're really easy to find. Just go like this, look and look. Just look and look, guys. You guys are gonna find it. You guys are literally going to find these SMTs in the market. It's like the easiest freaking thing to do. See, we made a lower low right here. And we make a lower high. But what did the price do? Just continued because we did have another SMT right here. So you can see, and it was way better. And price just wanted to go that route. So yeah, guys, just look for SMTs in the market. I hope this video helps you guys a lot, and we're gonna go over highs and lows in the market. So I think I went over that, but I feel like nobody understands it like how I did back then too. So I'm just gonna teach you guys it. So I'm gonna delete all these drawings. So you guys need to know your highs and lows in the market. I'm telling you guys this. You guys are gonna need to know this because it's gonna come in handy when you're trading, and you're gonna be like, oh, there's a high and low right there, SMT. Okay, what the hell is that? Okay, we're not gonna look at that. Okay, boom. So this is like the easiest thing every trader can learn. A high and a low. So a low is just a candle move down, then a move up. So boom, we got our low right here. We got more lows right here, move down, then a move up. Right here, we got more down, move up, then move down, move down, then move up. And what could this be used for? Like liquidity. I mean, there's a bunch of liquidity that needs to be filled right here. So that's what price is probably going to do right now and just drop down to these liquidity zones right here. Boom, you got more liquidity. You got more liquidity, more lows to give you a fill. This low just got filled right now. Boom. So that's lows. That's just literally lows. It's just literally just the candle move down and the candle move up. Move, candle move down, candle move up. Candle move down, candle move up. Now, I know a lot of people are going to be like, is this a low? Let me find a black Joji. Like, okay, right here. Good example. All right. That one's not skinny enough. Okay, bro. Where's my candles? All right, you guys are going to see them like this, like really skinny. And you guys are gonna be seeing this move down, then a move up. No, guys, this is not a low. There's nothing right there. It's literally just nothing. You gotta find a solid good candle. Like you can just zoom out and just mark them. But for the highs, it's different. The high is just the move up and then the move down. So this is the high right here, boom. This is the high right here, boom. This is the high right here, boom. So I want you guys just to find 5 SMTs and find like 20 highs and lows in the market. Right there, like highs and lows. Boom. high, low, right there. Guys can zoom out, just fucking mark them out. Boom, move up, then move down. Boom, move down, then move up, right here, low. Boom, move down, then move up, boom. Move up, then move down, high, but that shit got sweeped. Boom, move up, then move down. Boom, move up, then move down. Boom, move up, then move down. It's really that simple, guys. Today was just a calm little simple. Today was a calm Tuesday. I'm not gonna lie. So it's gonna be the wrap for the video. I hope you guys enjoyed it. Trade recap probably pretty soon. News has been going crazy. I'm not gonna lie. Probably gonna take a trade on tomorrow, depending on price action is. I don't know. It's gonna be FOMC, but it's a yellow file or an orange file. So I'm gonna have to see on that. Yeah, FOMC and then Trump speaks, but that's a CPI. Okay. So either Wednesday or Friday, I'm gonna be posting. I don't know yet. I gotta see. But I hope you guys learned something from this video. Stay blessed. Jesus loves you, and hope you guys enjoyed. And there's many more to come soon. So see you guys in the next one.